You hand over a few ordinary notes, roll forward, and watch your car disappear beneath soap, spinning brushes, and water. The result is a cleaner car, clean glass, and no reason to think the building is doing anything more complicated than washing dirt away. That is the trick. A car wash looks aggressively normal because everything on display has an obvious explanation. Cars arrive, money changes hands, machines run, workers move, and another customer takes your place before you have even left the lot. Nothing looks unusual, but if someone wanted illegal cash to look like ordinary business income, that normality is exactly what would make the place quietly in. There is no need for a luxury product, a secret room, or some dramatic purchase happening under bright lights. What matters is a business where many small payments can happen all day without any single one feeling memorable. Your wash becomes one tiny piece of a larger picture, while the books can tell a story you never see. The tunnel is real, the customers are real, and the danger begins only when that reality is used as cover while the line keeps moving. By the end, you will see why your car was never the most useful thing entering the building. There is an obvious objection to most car washes are legitimate businesses, and cash alone does not make one suspicious when you see it changes. You can run a busy wash, pay staff, repair equipment, and deposit honest revenue without anything criminal happening. That matters. Car washes are not laundering machines, but some features can attract people trying to disguise criminal processes. What matters is not one customer or one payment, but the quiet accumulation of ordinary activity around them. Hold on to one word because it will explain almost everything later. Volume. So which would you trust more, the cash drawer or the bank statement? You can look at the drawer and see money, or at the statement and see deposits, but neither tells you whether the story behind them is genuine, where the cash came from, or what activity actually produced it in the first. I trust neither alone, because context turns ordinary activity into evidence. If you enjoy this kind of business breakdown, like and subscribe while you choose your side. Right, car washes because your ordinary payment makes the larger story believable. A car wash is easiest to misunderstand when you stare at the brushes because the financial story begins before any brush. Think about an insurance company. You do not judge it by one policy, one customer, or one claim. You judge it by ordinary events becoming a pattern, and a cash-heavy service business can be read the same way. Your individual payment is tiny, but the business records the stream. The stream is what matters. That distinction is simple, and it is a crucial one. A legitimate operator needs the stream to pay wages, chemicals, rent, repairs, utilities, and a criminally misused business can exploit the same rhythm to make suspicious money appear less unusual beside genuine sales. Nothing about cash itself is criminal, and nothing about a busy car wash proves wrongdoing. The vulnerability appears only when real commercial activity is used as camouflage. That is why the United States Treasury describes cash-intensive businesses as an old and reliable way illicit funds can be placed and layered. The scale matters because you are not looking at some exotic corner of commerce. The United States Census Bureau counted 16,976 employer car washes in 2019, and 9,048 of them had fewer than 5 employees. Most of those businesses are exactly what they appear. Yet normality can quietly make a dishonest story harder to notice from a distance. If you watched only one honest wash cycle, you could learn almost nothing about whether the accounting behind a whole day was honest too. You see a local service, your bank sees a deposit, and neither view automatically explains every transaction behind it. To understand the gap, you have to leave the roadside view and follow your own payment toward the kiosk. You reach the payment kiosk before a drop of water touches your car. You choose a wash, hand over cash or a card, and receive permission to move forward. For an honest operator, that moment is simply a sale. For a dishonest one, the useful feature is that your payment resembles many other small payments. The register records what you bought, not the history of every note that entered the drawer. That is the first station, and the queue will make the sale look even more ordinary. In one industry example from 2021, CarWash.com used a $15 individual wash and a $25 unlimited plan to show how small payments can repeat. That example is not a national price, and it does not make routine cash suspicious by itself. It is useful only as an illustration of repeat low-ticket pricing. You still stand inside a normal business doing normal business. Then the kiosk gives you a paper receipt small enough to fold into your pocket, so keep it for later. It proves that you were here, you paid, and a real service was sold, which is narrower than proving that every recorded sale was genuine. The receipt is ordinary on purpose, because ordinary evidence is exactly what makes the next station feel so convincing. You enter the queue, where your car becomes one more car in a line. This is the second station, with someone ahead of you and another driver sliding quietly into place behind you. Volume starts to change meaning here, because your single wash is becoming part of a visible operating pattern. You see cars arriving, while the books see sales accumulating, and those views normally belong together. A dishonest operator can try to exploit the distance between what happened physically and what later appears in the queue supplies genuine activity, then hands you to the strongest piece of evidence in the building. You enter the tunnel, where brushes turn, water falls, lights flash, and the machine performs the service you actually bought. This is the third station, and now nobody can say the business is merely a sign over an empty room. The Bureau of Labor Statistics put the median hourly wage for cleaners of vehicles and equipment at $14.90 in 2022. Your payment can genuinely help cover labor, chemicals, maintenance, utilities, equipment, and debt. That reality matters. Misuse can sit beside legitimate activity instead of replacing it. The tunnel can keep doing its real job while your payment moves toward a place you cannot see yet. You roll out of the tunnel into the exit area, where your car finally looks like the thing you paid for. This is the fourth station. You can touch the clean glass, see water sliding from the paint, and decide whether the service felt worth it. That visible result matters because it gives the business something an empty storefront cannot easily fake. Ordinary customers leaving with an obvious reason for you are still nowhere near the account. You are looking at proof that a real service happened, and your presence has helped create that proof. Then you move toward the vacuum bays or finishing area, where the site adds another layer of ordinary activity around you. Around the bays are employees, towels, hoses, mats, bins, and cars spending time on the property after the tunnel has stopped. The United States Census Bureau counted 163,178 workers across employer car washes in 2019. That figure proves nothing about one location, but it reminds you that a car wash can leave a real labor footprint. Real traffic leaves one too, even when nobody is watching very closely. The wash occupies time, equipment, space, and attention that can later be compared with what the business said. Now follow the payment away from the customer side and into the back office. This is the fifth station, where the moment at the kiosk becomes part of a record rather than a memory. An honest operator has card sales, cash, memberships, refunds, payroll, chemicals, repairs, and the other costs of keeping your wash available. Those records do not automatically reveal misconduct, but they give investigators and banks something independent to compare with the revenues. The comparison asks whether what the register says fits what staffing, equipment, traffic, and ordinary operating costs suggest should have happened. Volume is becoming measurable now, not merely visible. Industry reporting covered by the International Car Wash Association has put average monthly member revenue at around $30 in periods. That is a benchmark, not a rule for your local site, but it shows how recurring customers can create patterns over time. Your repeated visits become predictable activity, and predictable activity is harder to imitate consistently across every record the business creates. The sixth station is the bank account, where you disappear from view but your payment does not. The bank sees deposits, card settlements, payroll, suppliers, taxes, rent, repairs, and the financial movement left behind by people like you. It does not see your clean car, so it has to judge whether the money behaves like the business behind it. That is where the car wash quietly stops, being just a place that can hide a story and becomes a place that can contradict one. You have already won the first argument, because the car wash never needed to be fake for the risk to exist. It can be a functioning business with real customers, staff, costs, and a service you can see hang. The vulnerable feature is not fiction, it is mixture. Volume now pays off, and you can see why the word mattered. One strange payment can stand out, while a stream of ordinary payments creates context around everything moving through the business. That does not mean volume defeats scrutiny or turns suspicious money legitimate. It means the question becomes whether the activity behind that money makes sense. The United States Census Bureau counted 16,976 employer car washes in 2009. Most are ordinary businesses, but the scale shows you how familiar the model looks in American commerce. The United States Treasury has described cash-intensive businesses as one of the oldest and most reliable ways illicit funds can be placed and layered through functioning companies, because the surrounding business may be real even when the financial story is not. Notice what that description does not require from you. You do not need to imagine a secret basement or a fake building, because the dangerous part can sit beside a real service. Industry reporting covered by the International Car Wash Association has put average monthly member revenue at around $30 in recent periods. For you, that matters less as a price than as evidence that recurring customers can create stable patterns over time. A genuine pattern can quietly support a business, but it can also give investigators something to compare against claims that do not fit. So why does the same normality that can hide a problem also make it easy? Because you cannot make one story believable forever, unless the records, the operating footprint, and the bank keep agreeing with each other. The first prop is the bank record, and you have to change position to see why it matters. Until now, the car wash has looked believable because real cars, workers, and equipment have kept moving around it. Now the view shifts from the tunnel to paperwork, where a normal day should leave a matching trail. The United States Treasury's National Money Laundering Risk Assessment describes cash-intensive businesses as an old and reliable setting for placing and layering illicit funds through functioning companies. Functioning is the important word. A business can be real, serve real customers, and still be misused if the financial story no longer matches the activity underneath it. That is why cash alone proves little, because honest operators handle it without committing a crime. The Internal Revenue Service says a trade or business generally reports cash receipts above $10,000 from a single transaction or related transaction on Form 8300. The same guidance gives a filing window of 15 days and requires businesses to keep the form and supporting records for 5 years. None of those rules turns your wash payment into suspicious activity, but they show that cash-heavy commerce still creates records and obligations. Treasury's assessment also cites one laundering operation involving $30 million in fraud proceeds and another scheme involving $19 million. Those examples were not car wash cases, and I am not going to pretend otherwise. The lesson is the comparison investigators make between money movement and the entities claiming to have produced it. A bank statement can quietly look ordinary, but the operating floor gives it something physical to agree with. That operating footprint is the second prop, and it is harder to keep abstract. According to the United States Census Bureau, employer or car washes had 16,976 establishments and 163,178 workers in 2019. The same census release says 9,048 of those establishments had fewer than 5 employees, showing how small many locations can be. You can see that shape in staffing, repairs, chemical orders, utility use, card settlements, and cars moving through the site. The Bureau of Labor Statistics reported a median hourly wage of $14.09 for vehicle and equipment cleaners in 2022. A real operator has to make those costs coexist with the sales story. And when independent records agree, nothing dramatic happens, which is exactly what an honest business should want. The weakness appears when they stop agreeing. One deposit rarely tells the whole story, but repeated mismatches can make the camouflage thinner every time another record arrives. The bank account looked like the strongest cover in the building, and the operating floor is where that confidence begins to quietly. The third prop is the pattern itself, where census data put car wash payroll per employee at $21,911 in 2019, up from $18,703 in 2015, giving the financial story one more ordinary benchmark. California had 2,025 employer car washes and 24,851 workers. Another 56,621 workers sat in establishments employing 20 to 49 people. None of those figures proves misconduct, which is genuinely the point. The Bureau of Labor Statistics estimated 359,530 vehicle and equipment cleaners in 2022. Industry reporting put monthly car wash member revenue around $30, creating a pattern that can quietly disagree with a false story. The car wash is not a magical machine for making dirty money clean. It is almost completely the opposite. The same ordinary activity that makes a false story look plausible also creates records, costs, customers, workers, physical limits, and independent traces that can expose it later when the financial story stops matching what actually happened on the ground in reality. Both things are genuinely true. A functioning car wash can quietly provide cover because you see a real business, your bank sees real activity, and your payment joins an ordinary stream, but that same reality leaves so many independent traces that a dishonest financial story has to keep matching the physical world long after the car. That is the mechanism, and it is a fragile one. Volume makes an explanation look natural, but gives investigators more reality to compare. No story can fake the world forever. Think of the receipt in the pocket beside you. Because the tunnel moved, the car came out clean, and the business recorded a sale, while the receipt proved that visit, but never proved every line in the ledger belonged to another customer. You thought you were the customer buying a clean car. But in the laundering version of this story, your ordinary presence was quietly supplying something genuinely valuable: credibility. If you enjoyed pulling apart an ordinary business by following the money instead of the storefront, like the video and subscribe, because this channel walks through familiar businesses and finds the mechanisms most people usually overlook. Watch how aquarium businesses make money next, then open the Business Mechanics playlist for more episodes that trace payments, operating systems, and hidden incentives from the customer side all the way through the business. See you in the next one.